Alrighty guys, so in today's video, we're going to go through the 3 drives pattern, how to actually look for it, how to anticipate it, and we'll go through an example where I actually use this pattern to actually execute a trade on. So this is roughly what you're looking at. Now, you're imagining here that you've got some buy side liquidity resting above. You've got 3 drives close to hitting that buy side liquidity, but the point here is that you don't want to take it out just yet, right? So the way I see this is each of these 3 drives into or close to this buy side liquidity generates enough energy or enough power to then move in the opposite direction. So when I talk about liquidity, I see it as money, I see it as energy, I see it as power. So once we generate enough liquidity, or we take it a swing high, or we have this kind of pattern forming, that allows the market to then reprice, right? So the market always moves from discount to premium, discount to premium. It can't just go up in one big spike, and it also can't go down in one big spike. So we've got to have movement up, down, up, down, up, down. So this is what this takes advantage of and how I took advantage of this yesterday. Now, all of this was called out in the Discord. Now, my Discord isn't a signal service as such, but when I'm in a trade or I'm about to take a trade or someone asks me what I'm doing, I'm happy to give you the information. I'm happy to let you know what I'm looking at, where my stop loss is, where I'm entering, and we all help each other there. We've got people that trade Forex, myself, either futures, other people, indices. So we've got a big community there. So if you're interested in that, just let me know. I do have the link in my TikTok bio and there's a discount code there. If not, then, send me a message here and we can get onto that. But if you're learning from these videos, stay like this. I'm happy to keep helping you guys here. So let's move on. So 3 drives pattern, almost hitting the buy side liquidity, and then you've got a market structure shift. Same entry model now, right? So the only different thing here is that you don't actually take out that buy side liquidity before the market structure shift. So you had the shift. In this case, or yesterday's case, I entered off a bearish fair value gap, took most of my profits out of the next big bullish fair value gap because the overall order flow was bullish. And let's actually get into the live chart. So here was the example from yesterday, right? So compare what I just showed you to this. 1 drive up, 2 drives up, 3 drives up. We've got a failure swing here, which indicates that price is willing to head down now. Once we close below the body or the opening price of this candle, there's a change in the state of delivery. That's also accompanied by 1 and 2 market structure shifts, right? So at this point, there's many confluences I have to enter the trade. And we've already taken our Asian buy side liquidity here and another point of buy side liquidity here. Furthermore, look how close the next buy side liquidity is. So this is what I'm talking about. It'll get very close, very close. And then you have this 3 drives pattern and then your typical market structure shift and return to some kind of PD array. So for me, when I was watching the price, the way I kind of was able to call this out in the Discord was kind of for these reasons here. So I saw the market rally up. I saw the market rally up. I saw the market rally up again. And then look what happens from 130 to 2. Do we continue with that energy? Do we continue with that pressure? We don't, right? So right at this point here, give or take, I was anticipating the 3 drives pattern and I called that out in my Discord. And I had 1 or 2 things that was going to happen in my mind that I called out. Number 1, we're going to run really quickly to the buy side liquidity and then I'm looking for shorts. Or number 2, we're going to continue accumulating and the 3 drives pattern will play out, which is what did. So it's really nice to see that analysis play out. And let me talk through how I executed and then where I took my partials, where I took my profits, and why I did take it at those specific points, right? So there's your fair value gap, there's your CIBI. My entry came from the start, right? So there was a limit order set right there at the start of the fair value gap. Some people have asked me, do you enter straight away? Do you manually enter? Do you set limit orders? Do you enter from consequent encroachment? It's up to you. Personally, I usually enter all the time from the start, right? In this case, the stop loss didn't need to be too big and I could enter from the start, so I did, right? What can happen if you enter too high up? You might not get filled, right? So price might just tap here and then head down and you might not get filled. So for me, I've kind of learned over time that it's better off, I'd rather sacrifice a little bit of risk to reward and get an entry rather than miss out on the move and have to watch it, right? That's just me personally. So I took 1 entry here with my stop loss just above this high. Price came down and reached 1-to-1. At that point, we tapped into this bullish gap. So right here, as soon as we tapped into that gap, that's where 1 of my partials came off, right? Then when price returned again, I executed again into the same trade, right? So this is almost like pyramiding into the same position, right? This entry was actually better than this entry because I got an entry of consequent encroachment. So this second entry had the same stop loss, but it was higher up in this fair value gap, which is good. As price came down, I took one partial here. The rest of the contracts came off at this swing low and this swing low. Now you might ask, why here? Why didn't I leave a runner? Well, I did originally have a runner in, but look at the reaction after we take out liquidity. Now, this is something that's really, really important to consider. Would you agree with me when I say that the overall order flow, just on a small time frame here, from midnight is bullish? Just from midnight, it's bullish, right? Look where price is here. We've just been stepping up and up and up. So if I'm going to take a short, technically I'm going against the overall order flow. And even on a higher time frame, if you look at the daily chart, Nasdaq's been pumping. We've been moving higher and higher and higher. So this trade is, I guess, counter trading or counter trend trading. So we've got to be mindful that at any point in time where the market sees fit, right, based on the algorithm, we could reverse and continue the overall order flow. So what happens was I saw this swing low get taken and we continued lower. So the next take profit was here. Once this swing low got taken, did we aggressively push past it or did we kind of stop? And that's the question I encourage you to ask yourself when you see swing highs and swing lows taken out. Do we aggressively push past it or do we kind of stop, form some resistance or support and then start to reverse, right? So at this point here, I'm like, okay, I'm getting out of the position. And I'm glad I did because then we started to step our way back up. So this is a trade I took based off the 3 drives pattern. It's one of those things that won't pop up all the time, right? It won't pop up all the time. I'm going to say once a week, once every couple of weeks, you will see it pop up. I've seen this happen in the New York session. I've seen it happen in the PM session. I've also seen it happen now in the London session. So